What's up, people? This is Prime Numbers here, and I'm talking about accounting today. So basically, I've studied a lot of accounting, and I feel like the conventional way of teaching it is kind of unnecessarily complicated, especially since most users of accounting just want to know the basics. I'd say most users of accounting are business owners, investors, or students, and it's not like they want to know all the debits and credits and all the fair value accounting details. They just want to know the basics so they can use this in their daily life. So the purpose here is to just kind of explain the basics of the income statement. So your income statement shows your financial performance over a given period of time. So for example, McDonald's has an income statement for, let's say, 2011, and that will show their financial performance for that entire year. So the sales are going to show the business transaction, show the money received from your customer over that time period. So for McDonald's, it's going to show how much money the customers paid McDonald's for their hamburgers and that kind of stuff. The expenses are going to include the employee salaries, the rent that they're paying for their buildings, the taxes that they're paying, and the cost of goods sold. And the cost of goods sold for McDonald's is going to be the price that they're paying for the hamburgers, the lettuce, the meat patties, and so forth. So your profit is going to be your sales minus your expenses. So that's kind of the basic framework for the income statement. And as you'll see in a minute, it gets a lot more complicated. Basically what happens is this expenses line item gets broken out into much more detail. So when you look at a real income statement, it looks more intimidating than what we're looking at right here, where it's just sales minus expenses equals profit. But at the end of the day, this is what we're looking at, and the purpose of a business is to make a profit, to maximize the profit. So this is obviously a very relevant data point. So here I'm going to show you McDonald's real income statement, and this is for 2010. So this revenue right here is a synonymous term with sales. So in 2010, McDonald's received $24 billion from customers. The reason that's billions is because these are in millions of US dollars. So that's why that's billions. And then the profit that I was telling you about earlier is right here. So this is the net income is the 4.9 billion down here. So this is how much money McDonald's made that year after subtracting all the expenses. And here you can see that the expenses were broken down into the cost of revenue, which is your hamburgers, your hamburger patties, that kind of stuff, and some other expenses. So basically, I'll leave it at that for this video, and in the next video, I'll discuss the expenses in more detail.